Okay, we're live, right? Good evening, hello, and good evening, everyone, and welcome to another episode of the Ringgit Plus Show Live, or our special segment called Ask the Expert Anything. We still haven't decided what's the actual name of this. Ask the Expert Anything. And this evening we have Han, who is back with us for this episode. Han, how are you doing?
Hi, Pang. Good evening, everyone.
All
Good. How
right.
are you?
I'm good. I'm good. So quite excited to talk about this week's episode. We are going to be covering a subject that I think a lot of people are going to be interested about. Though probably some of you may already know most of what we're going to talk about, but as you know, crypto has been a pretty big deal in the last year and a half. Especially last year when it took on a life of its own during the pandemic and the economic crisis that happened afterwards. And of course, earlier this year, several months ago, when all of the cryptocurrencies basically kind of went into all-time highs before kind of correcting itself. But at the same time, it also meant that a lot of retail investors, like you and me, would be interested, and some of you may have already been investing. But if you are interested to know more about cryptocurrencies and the crypto ecosystem before investing, maybe this is a good opportunity for you guys, and definitely in future episodes as well. So for this episode, we're actually going to just be covering the basics, very short introduction into cryptocurrencies, and Han is obviously here. He is going to be sharing a little bit more about building a cryptocurrency portfolio within your investment portfolio, right? So I know some of you guys have already shared some questions, some really, really interesting questions on our Slido. But if you have more questions, you feel free to ask them in the comment section, whether you're on Facebook or on YouTube. Just drop them a line, and we'll try our best to answer them within this session. Okay, Han, I have a quick introduction, obviously. I'm just going to share my screen. I don't know why I didn't do that earlier. Let's do that. Okay, so for cryptocurrencies, what do we need to know as a primer before we start investing, right? With cryptocurrencies, I think there are two sides of the fence. You're not really anywhere in between. You have people who are on the one side who are extremely bearish on the entire crypto ecosystem and says that, for example, you have a billionaire here who says that it is a worthless bubble. You have people like iFast, one of the biggest unit trust fund managers in the region, are also saying that this is really a greater fool theory where people, the fool after you will keep the price going up. But on the other hand, at the same time, you have news reports saying that billionaires, hedge funds, there are big money that is going into the ecosystem. So who exactly should you believe? That really is up to you. Han, I'm not sure which side of the fence you're on.
No, for me, the you shouldn't believe anyone, right? You should do your own research and look at the numbers, look at the facts, right, and then make your own determination, right? Don't believe anyone is what I would say, right?
Correct.
Not even me. Like, just think about what I said and research what I'm saying, right? So that's kind of what I would say.
Which is
Even
kind
me.
of true in even in like the real world finance, right? Like we're talking about stocks, you have a lot of stock gurus who will probably say the same things, and at the end of the day, it's just about taking some time and researching, because at the end of the day, this is your hard-earned money. Where you put it really depends on your research and what you believe in. So let's go back to basics, right? Han, maybe you just want to go a quick primer with what is a cryptocurrency, and then from there,
Yep.
why do some people call it an asset class, and why do some people not call it an asset class?
Yeah, no, good one to start off with. I think it's a lot of people's introduction into cryptocurrency is just to start investing into it. I think it's very important if you're going to invest in something to actually understand what it is first, right? And to understand what a cryptocurrency is, you need to understand what a currency is first, right? So what is a currency? Sounds like a very basic question, right? But let's go. let's do a bit of bare bones. What first principle? What is it, right? So a currency is very simply a mode of payment, right? And can be seen as a store of value, right? And that mode of payment is issued by usually a centralized authority, right? So someone who's centralized, meaning there's a person of somewhat authority a person or a thing like a central bank, right, which issues this mode of payments, right? And how do I know if I have an amount of something? What's my balance? And how do I know if I've given you something, right? That mode of payment, so a transaction, right? How much you have of that currency is verified or validated by two things, right? The first is, do you have it, right? So if I have my wallet here,
So cash.
do I have cash? I have cash. So I have a 1 ringgit note here. The fact that I have this 1 ringgit note in my wallet, in my pocket, proves to everyone that I in fact own 1 ringgit, right? So that's kind of existence of the legal tender, which is prescribed by, in our case, Bank Negara, right? And okay, to be fair, in 2021, most of our ringgits are actually held digitally already, right? Or rather, we access the fact that we own a certain amount digitally through when we sign into online banking and stuff like that, right? And so that's the second way to know how much balance you have and how to record transactions between people, right? Which is somebody or a bank in this case, which is a trusted counterparty of that central bank to validate that Han in fact owns 1 ringgit in my bank, CIMB, Maybank, Public Bank. And if he transfers that 1 ringgit to Pang, Bank Negara trusts CIMB or Maybank, whoever, to say, yes, indeed, Han moved 1 ringgit to Pang, right? So that's kind of like basically what a currency is. Now, what is a cryptocurrency, right? A cryptocurrency is very similar in many ways, right? It is a mode of payment. It is a store of value. A couple of key differences, right? One is that there is no kind of physical note. I don't have it. I don't have a Bitcoin coin.
A Bitcoin, yeah.
A Bitcoin coin. It's usually digital, digital only, right? And second, balances, that how much I own or how much you own, and transactions between us are recorded fully digitally on a decentralized network run by computers, right? So it's not like CIMB records that I own this and I've sent you this. It's literally, it's on a cloud network or a cloud hosted software called the blockchain, and millions of computers essentially, right, on that cloud validate. The word is validate, not verify.
Yeah.
That Han in fact owns 1 coin or one whatever, or Han has transferred at some point in time 1 coin to Pang. So essentially, it's similar in many ways. There are two key differences, and those two are the key differences.
Right. So
Right.
then,
And then the next question, yeah. So the next question people ask, right, is, okay, Han, that sounds very interesting, right? But it sounds like a very technical kind of a way to organize money. Why are people telling me that I can invest in a cryptocurrency? How is it an investable thing? What you've talked about sounds very technical and kind of computery, right? It sounds very like boring, right? Why are people telling me to invest in a cryptocurrency? I think this is where a lot of people fall short, which is, why is it an investable asset class? As a CFP or a chartered financial analyst, right? When we analyze things, we have to analyze what makes an asset class, an asset, right? And to do that, we have to explain how assets work, right? So in this case, why is cryptocurrency an asset class? They have actually many uses, right, or functions or factors that impact their prices, right? Why is it expensive or cheap or high or low, right? Cryptocurrencies like Bitcoin, Ether, and many others, right? They have prices which are determined by many factors, right? Some of the more common ones are it is a store of value, meaning the fact that millions of computers can validate that Han in fact owns one thing, that 1 coin, makes it a very useful store of value, right? If it's stored on many places, like it's not easily hacked, right? The software itself is not easily hacked. So you try to hack into one computer, right? Then it won't tally up with the millions out there, which makes the entire network not so hackable versus a single point, a single institution which is hackable, although it's not that easy to hack a bank. But that's a single point of if you wanted to change Han's bank account balance, you could just hack into CIB or Maybank and change my bank account balance, right? So that makes it useful as a store of value. So there is value there. People can think of things like gold. You can think of things like other currencies which are a store of value, right? And the key word here is trust, right? Right? Ringgit, US dollar, yen. These things are actually just pieces of paper that have value because we as people trust in the governments of that day to back that currency. If nobody else uses that currency, the government will, and you can trade it for that value. So that's a key important point to note, right? Some of you would have seen places like Afghanistan recently, where there will be a lot less trust in when there's such a big upheaval in a country of the government backing that value. So it's important to have trust. And for me, Bitcoin, Ether, they're also driven by trust, right? And how do we trust the network? The fact that it's a lot less hackable because it's stored on millions of computers, right? So that key element of trust makes it a good store of value. It's also a digital currency, which means it operates on the internet. You can send that trusted value, or a store of value, one person to another within minutes worldwide, right? And you can immediately see how that itself has economic value, right? Because people like MoneyGram, TransferWise, Western Union, they are huge billion-dollar businesses.
Yep.
On the back of doing this exact thing, which is transferring money from one person to another, right? So that is a value that drives many cryptocurrencies. Some cryptocurrencies you can store not just the fact that Han owns one thing, or we transfer things between us, but you can store other things like some information within that very secure network, and being able to store information in that way and execute code essentially has value, right? And last, and I guess the most commonly known trope of cryptocurrency is that there is speculative value. And what this means is that the value of this asset is driven by how much somebody is willing to buy or sell it at, right? But guess what? This exists with pretty much every single asset class globally,
That's
right?
true.
Properties have speculative value. Stocks have speculative value.
Definitely.
Bonds have speculative value. Even pieces of art have speculative value. How much are you willing to pay for art versus me? Right? So that's kind of the four things that drive cryptocurrency prices. And because they have prices and they go up and down, as a financial person or financial advisor, financial planner, we can then look and track those price movements and establish baselines for things like what returns look like on any given month or year, plus volatility, right? And because they're so trackable, that makes it an asset class.
So technically, you're on the other side of the fence, right?
I look at it as there is a lot of utility value in a cryptocurrency, whether prices today are driven by more speculative value, that's up for debate, right? So that's where I stand on the fence, which is
Cool.
Whether things are going to the moon or not is not so relevant to me. Versus, do they actually serve a purpose? And
Yep.
it's starting to look like many cryptocurrencies actually do serve a purpose, right? Many don't, but many do, right? Right.
True.
So that's where I stand with this.
So just, I mean, at the end of the day, we're not also telling people that whether it's an asset class or not, because I think many Malaysians, I think there are some surveys out there, not really sure how true they are, but it seems like Malaysia is one of the more, one of the Malaysians, sorry, not Malaysia as a country, but Malaysians in general seems to have a more open and relationship with crypto. We have quite a few exchanges in Malaysia as well, and at the end of the day, we're not here to say whether you should or you should not. But the question is really, if you already are, how do you do that in a more responsible, financially responsible way, right? I think 20-30%. Some people go all in, and having their crypto millionaires out of the blue. That's not really a something that happens to everyone, right? For every winner there is a loser. So Han, you're here, and we want an expert's point of view in terms of building a crypto portfolio, right? Like we always say, when we're investing, you always want to diversify, but within your diversified portfolio, you actually do have your portion for cryptos. You can still have a diversified crypto portfolio within that matrix. Anyway.
Yep. No, absolutely.
So yes,
Absolutely.
Han, like what are the things that you should consider as an individual when you're investing into crypto?
Yep. Yeah. No, that's a really important distinction there, right? You use the word investing, and I think that's a crucial word to focus on first, right? Which is to ask yourself, when you're dealing with cryptocurrency and cryptocurrency markets, are you speculating? Are you trading? Or are you actually investing, right? I think that's an important question to ask yourself, right? I don't have to explain what a speculator is. I don't have to explain what a trader is. We can immediately
It's the same.
think
Yeah.
about it in kind of in stock trading and stock speculation terms. Very similar, right? Or are you a stock investor, right? So similarly, if you're thinking of cryptocurrency as a genuine investment within your portfolio, I think it's worth considering, right? But one thing to note is that it is extremely high risk, high return from the kind of numerical and quantitative perspective, right? So you do the research, right? It's got extremely high returns over the last 13 years since it's existed, 12 and a half years, 13 years since it existed, extremely high returns, extremely high volatility. What that means is a high degree of chance that your portfolio has wild swings in its value up and down, both up and down, right? But because of this high return, high risk, high return characteristics, right? It's worth considering in certain people's portfolios, right? Especially those who are looking to grow their wealth over a long period of time, right? And if you think about all the traditional thoughts around portfolio construction, you got to think of things which are not correlated with each other, which means when one thing goes up, other things need to go down, and vice versa. Sorry, I should have started the other way first, which is when things in your portfolio go down, you need other things which are not correlated with it to go up. So you immediately think of things like airline stocks with oil prices, glove stocks with pandemics, etc., etc. Right? Similarly, like if your goal as an investor over the long term is I need to have high portfolio returns with controlled volatility. So I don't want, as in, I think I've done the homework. I know cryptocurrency is heavily volatile. What does that look like for me in my portfolio? I'm a traditional investor. I haven't gone to crypto yet. How should I look at it? And the answer, the secret is don't look at it in any special way, right? All quantitative financial metrics can work, right? Because of all the factors I said earlier, it's got utility value, it's got speculative value, which means you can treat it just like any other asset class and look at it quantitatively. And I think if you look at the last 5 years, 10 years, a tiny bit of crypto in your portfolio tends to improve your portfolio both from a risk and a return perspective, right? I.e., you get a lot more return, maybe not that much more than if you had silang the whole amount, stuck the whole amount. I mean, but you get a very safe additional more return. Why do I say safe? Because you don't increase your volatility that much. You test a little bit. How much is a little bit? I'd say somewhere between 3 to 5% of your portfolio, right? Gets you a nice level of diversification versus any other asset class. Plus, can increase your portfolio returns if it performs the way it has been, right? Without increasing your volatility too much. So that's kind of like a free lunch almost, right? You get more returns without that much more volatility,
Right.
which is what every investor needs to target over
Correct.
time, right? So for me, that's kind of what that table is on the bottom right hand corner there, which is
Yeah, maybe you
have
want
a
to
little bit
explain
of
the
control.
table a little bit more.
Yeah, let's do that. So when I said quantitative analysis of asset classes, right? So you look at your traditional stocks and your bonds. Those are well researched, well known. Stocks have higher returns, slightly higher volatility. When I say higher, I mean in this case, in the last 5 years, stocks have returned in the teens of returns, which has been pretty high historically. Like typically ranges more like the high single digits over a longer period of time, so 7 to 9%. But in the last 5 years, pretty high, right? But with high volatility relatively to anything else, right? So 20% volatility means most of the time you can expect returns to be 20% lower or 20% higher than that average, right? So that's what that means, right? Most of the time, meaning 2/3 of the time at least, that's what volatility means. You can expect that portion of your portfolio to drop by that much or increase by that much. So that's quite a big swing, right? Not many people can stomach a 20% portfolio dip in a year, right? Except those who are really much younger, longer time horizons. And on the other side of the coin, you have bonds, much lower return, much lower the return, much lower volatility. So you won't have to stomach those big double-digit drops in your portfolio value if you had all bonds. But obviously, you get very muted returns. And the best traditional portfolio previous to cryptocurrency was to have kind of a nice 50-50 balance or a 70-30 balance, depending on how old you are. The younger you are, the more risk you can take, the more equities you have. The older you are, the less you can take. So something more like a 50-50. But for young people in their kind of 20s and 30s, a 70 portfolio is a classical portfolio that a CFP like myself would recommend, right? And that gets you kind of a reasonable return for a reasonable amount of volatility, right? So it's somewhat controlled. Now, if you look at cryptocurrency, however, like that first column over there, you'll see some very, very interesting numbers. I think the one number I want to focus on is not so much the return. I think everyone's had enough focus on returns and high
True.
returns of cryptocurrency, right? I want to focus on the volatility and the risk, right? What does 80.7 mean, Han? 80.7% annualized volatility for in this case I use Bitcoin as kind of the bellwether, right? Means that in any given year, right, 2/3 out of the time, yeah, your portfolio can be expected to go less than or more than 80%, right? So that's huge drop. And for any any investor out there, right, looking for long-term returns to either send their kids to university or retire comfortably, right, an 80% drop in their portfolio is not a smart risk to take, right? It's better to be diversified, have a little bit of crypto there to boost your returns. I don't want to use the word guarantee, but increase your likelihood of actually achieving
Goals.
your goals, right? Like,
Mhm.
and not go crazy on these risks. So that's what I would say. And for me, fortunately, crypto allows you to do a little bit of both, right? Which is, hey, I can really have a nice little, it's like having a little turbo in your car without taking too much risk. You don't have to rip out stuff in your car. You just have a little turbo, boom, get a little bit of a boost without having to kind of do crazy things to your portfolio, right? And what I mean by crazy things is if you see portfolio volatility need not be high despite you having crypto in it. So that's kind of what this table shows.
Right. Cool. So then I think also you want to talk a little bit more about within the crypto space, this 3 to 5% allocation, what can you do with it? Like, do you go all in on like Bitcoin? What's a smart way to go about this, right? I think we talk a lot about diversification, but within the crypto space, does this rule still apply?
Oh, it's a really good point. I think diversification, we talked about diversification within your overall portfolio, right? And how crypto should be a little diversifier onto your overall portfolio. That's really
Yeah.
nice, right? But I think if you look at cryptocurrency and what I talked about in the previous slides around the different uses of a cryptocurrency, right? So for example, I can't go through, the 10,000 cryptocurrencies out there, right? But if you look at the big ones, right? So Bitcoin is starting to be known as digital gold. Why? Because you can't do too much with it other than hold it and move it from one person to other within 10 minutes, right? But cryptocurrencies like Ether on the Ethereum network has so much more uses than just holding value, right? They can hold
Yep.
information and code in there, which creates all kinds of different uses, right? So because they have different functions and purposes, they are more likely to be uncorrelated with each other. That's not the case today, but over time, I expect this to be the case as cryptocurrencies diverge in uses. Just like if you bought an airline stock versus a glove manufacturer, they would move not so much in tandem with each other because they have different forces
That
driving
would affect them.
those stock prices, right?
Mhm.
Likewise, in the cryptocurrency world, if you choose cryptocurrencies which have different uses, different purposes, right, then they're more likely to be diversified within themselves as well, right? And that's what I would recommend, which is don't go all in on one cryptocurrency. Pick a few top ones, top meaning the bigger ones out there which have clear use cases. If you don't know what those use cases are, that's probably a good sign that you shouldn't be investing in them, right? Figure out what those use cases are, figure out how diversified they are from each other, and have a basket, at least 3 to 4 to 5, if not a little bit more, no issue. Don't just go in all in on one. That's my recommendation because of that diversification also works in a crypto world, right? That's kind of traditional financial concepts working in this kind of new financial asset class.
Yeah, I think that's very important to note, right? Like a lot of traditional financial people, I guess people, financial experts, so to say, they have been very hesitant in when it comes to cryptocurrencies and as an investment, right? So I think Han, yeah, I hope there will be more more ex- exposure acceptance from within this space as well. When it comes to and openness to look into this ecosystem and say, hey, this is something that we can really look into as a future form of investment, right? So anyway, I think we reached the end of the slides. Yeah, we've reached the end of the slides. I'm going to close it. We have come to the end of the discussion, but we are going to take some questions, right? We've got quite a few questions from the Slido that we have. If you remember, again, if you guys have any questions, share them onto the comment section. Our guys at the back end will pick it up and share it over. So the first question, which we probably have already answered, but Han, should I put 50% of my asset allocation on crypto?
Really, really good question. I think, I mean, if you look at what I shared earlier around why are you investing in crypto, right? If it's part of a long-term diversified investment, there's a very good use case for it, a tiny bit that adds a lot of value, right? It helps you actually reduce your risk because it's less correlated to other asset classes, right? And it can boost your returns if it continues to perform the way it has done, right? So as a kind of objective financial analyst, I'll look at it and go like, okay, if I believe that there's a future for this asset class in the long term, and there may or may not be, but if I believe that there is, right, I'll look at the financial metrics and realize, okay, look, it looks like somewhere between 3 to 5% looks like a terrific kind of free lunch to a portfolio, right? Free lunch meaning you get higher returns and you don't get higher volatility, right? So that's kind of nice, right? If you're going to put 50% of your portfolio into crypto, then you're not getting that free lunch, right? You're having a paid lunch, meaning you're paying for potentially higher returns with a lot higher volatility. You saw earlier, I showed how Bitcoin had 4 times the volatility of a stock portfolio, right? So you're paying for those higher returns with tremendous volatility. If you're a young person and you can take that, you can afford to lose your entire wealth, at least 80% of it in any given year, 2/3 of the time, then yeah, I mean, that's something you might want to consider. But for me, like any kind of rational long-term investor would not be doing that kind of thing, right? So that's kind of, you're looking at rational long-term principles, I wouldn't be doing that.
Cool.
Right.
Yeah.
Why not take the free lunch and then consider the paid lunch later? That's what I would say.
That's a very level-headed perspective, which not a lot of people have generally when it comes to the crypto space, because we actually see that kind of volatility on a daily basis, right? So anyway, we go to the next question. I'm very new to investment. I just started some investments in robo-advisors and on FSM1, so I assume that's unit trust funds. How do I know if crypto investments is for me? Am I losing out if I don't start?
Oh, okay. I mean, that's a good question. And for me, I won't be worried too much about the specific platform. So, for example, you're in robo advisory, you're in unit trust, you're likely to be significantly in equities, so stocks, and bonds significantly, and maybe a little bit in gold, a little bit in kind of REITs and property stuff like that. Yeah, and a little bit more in commodities. So you probably have a balanced portfolio already, but you're missing kind of a very large asset class, right? Which can deliver that free lunch, which I keep talking about, high returns with limited volatility if you have a tiny piece in your portfolio. So that's what you're losing out on. But if you ask me, you can probably still reach most of your financial goals if you planned it properly. You're getting kind of high single-digit returns over a 20, 30-year period. You probably reach all your financial goals anyway. But for me, with that free lunch, you stand to achieve it even faster. So that's what you might be missing out on, right? And if you think about it, right, there's still a lot of doubt as to cryptocurrency as an asset class itself, right? Does it have value? So for me, you've got to make that decision for yourself based on all available information. Right? I've given you some today, right? Go home, do a bit of research, see if it applies, see if that makes sense to you, or you go like, Han, that doesn't make sense to me. I don't understand it. And for me, you're not losing out if you can achieve your financial goal at the end of the day. And that's what we go with Ringgit Plus Advance, which is, what's your goal? Can you achieve it? If crypto helps you achieve it faster, you should consider it. If it doesn't, you don't need it, then maybe you don't need it. You're not losing out.
Cool. Very nice answer. Okay, let's go for the next question. Generally speaking, Bitcoin gets its value because it's decentralized and finite. So it acts like an inflation hedge, just like gold. But what about other tokens such as Ethereum, Ether, or Ripple, right, XRP?
Good question again. I mean, like I said earlier, right, I don't have time to go through like all the different kind of growing uses of cryptocurrencies. I shared 4 main ones, right? But for me, Ethereum is an interesting one, right? It allows you to store within that kind of decentralized network of computers running this software. You don't just store how much I own of something on the software, on each piece of code in that software. You can actually store information, right? As well as instructions, right? So every time something gets happen, something happens, instructions can be executed by code. So that's kind of interesting with Ethereum, and with Ripple XRP. They're trying to displace global banking transactions and make it safer than traditional cryptocurrency using nodes. So as in, if you don't understand what I'm saying, you probably shouldn't be investing in cryptocurrencies. But if you do understand what I'm saying and are interested to know more, then that's a nice kind of like test to see whether you should be looking into it at all. But the key message with all these things is, right? If you can understand what a cryptocurrency does, you're in a much better place to think about investing in it than if you don't, right? And second to note is, don't put all your eggs into one basket, because these things have different uses, right? And each use might have a different level of adoption and scalability, right? Meaning, maybe in the future, we won't be sending much money to each other anymore. Who knows, right? That might affect, Western Union and TransferWise of the world, but it also might affect whichever cryptocurrency is focused on money transfers, right? So you got to think about the use case for i.e. economic value, and see and make sure you're diversified across many different economic values of a cryptocurrency.
Right. So basically, the same principles of traditional investing applies in cryptocurrency. This is exactly what we've been talking about, what you've been talking about, Han, earlier. Know what you're investing into. Okay. Oh, this is a very interesting one. Can I include my crypto investments into my will? Any particular steps that I need to look out for, and so on?
Yeah, good question. Long story short, you can do whatever you want in your will. So if I go like, okay, I want to give this T-shirt, Ringbus T-shirt, to my daughter when I leave this earth, right? It will be taken out of my closet and passed to her when if it's written out in my will, right? So likewise with the cryptocurrency, right? You can say, okay, I have X Bitcoin. You can write it down in your will. I have, as of this date, I have X Bitcoin, and I want it to be passed to my child or my wife or a charity, whichever that might be. But I think the best way to think about cryptocurrency is, imagine if you had your safe or your vault and you put a ton of cash in there, right? And only you knew the password, right? Even if you wrote it in a will, it's going to be difficult. I don't say impossible, but very difficult for anyone to access it if nobody knows how to get into that vault, right? Or that safe. And some of you may go like, okay, Han, someone can just break into my safe. I'm like, sure, but why would they have to? So why do you make them have to do that, right? So if you're going to write something on your will, make sure the person executing it has the means to execute it, meaning has some way to get your key, essentially, or your code, to unlock that cryptocurrency to then pass it on.
Which is a real thing, right? Like, we've always heard like people in the past who have lost the key phrases or the seed phrases, to their hardware wallets, the cold wallets, the cold wallets, and it's just been there for the last 5-10 years, and there's no way to access it. So you're right, like having the means to access these assets is it's just as important.
Yeah, I guess two ways to look at it. Exactly, two ways to look at it, right? If you deal in cryptocurrencies in a kind of more traditional way, i.e. with a centralized exchange or centralized asset manager, or someone who's centralized who has like a Sendirian Berhad or a PT Limited, private limited, you can actually get a probate and make them do things. That's fine, right? But if you are in true kind of decentralized world, you hold your crypto in a hardware wallet or in a private software, non-custodial software wallet. Think of it like that safe analogy where you can't get a legal person to do anything about it. It becomes quite impossible, in fact. So let's keep that in mind.
Yep. Okay, so we go to the next one. I think this is the question that I think a lot of people are going to ask you. Han, can you provide an ideal crypto breakdown? You mentioned 67, 30, 30, but within that 3%, what do you put it? How do you allocate? 50% Ethereum, 30% Bitcoin, 30% Litecoin, etc., etc.
Right. Okay, that's a good point. Okay, I think personally, if you have no specific view on any cryptocurrency, just like let's say you're thinking of investing in the stock market and you don't really have a specific view on a specific stock, right? So what you do, we recommend you go into a kind of a ETF or unit trust, right, where somebody does it for you and they track the market and you get market returns. That's good, right? So you get the exposure, right? Similarly, right, if you have no specific view, you haven't done the research, you don't know what cryptocurrencies do, right? But you understand the financial returns. You can see, you can do the graphs. You understand that's the volatility I'll get, that's the return I'll get. But I want to diversify exposure. The best way to do it is to just follow basically track the cryptocurrency market in terms of market cap. Right? So what I mean by that is exactly how you would do it with the S&P index, right? You would have quite a lot of Apple in there because Apple is a big part of the S&P. You will have a lot of Microsoft, Apple, Tesla, etc. Right? And similar rules apply, which is be as diversified as you can be, right? For about 3% of your portfolio, you probably don't need like kind of 50 stocks, i.e. 50 coins, right? Somewhere between 5 to 10 will do, right? And follow what Bitcoiners or crypto people call market dominance and market proportions of each cryptocurrency. So for example, right now, Bitcoin is probably about 40% of the overall crypto market. So you probably should have quite a lot in Bitcoin if of that portfolio, right? Then the next largest is Ethereum, which is kind of almost 20%, I think, of the market. So between those two, you probably have 60% of the market moves in a cryptocurrency already. Then you have 40% left. You can just try and mimic the overall market where you can, right? But the for me, if you ask me, traditional rules apply, which is don't just have it in kind of one or two. Get at least 5, better to have 10. Somewhere in that range is fine for a 3% portfolio amount, right? And the weightages should be very closely mirroring what their weightages of the overall market is. And that
Right.
you shouldn't go too far wrong, right?
Nice. That's a very comprehensive CFP style answer. So really, everyone who's watching, if you're interested to talk to Han more about cryptocurrencies, I think he's one of the best persons to speak to. Check out Ringer Plus Advance. Right. Sorry for the plug, but check out Ringer Plus Advance. It's a 1-to-1 financial planning service, and here you have a crypto-friendly person who will advise you on how to allocate your assets. Anyway, let's go for the next question. Do you think crypto is overvalued and most people buy it just to follow speculation?
Yeah, really good point. My thoughts on this is that you could if you focus on the word crypto and you go focus on the word over, I could have swapped it out with stocks. I could have swapped it out with property. I could have swapped it out with bonds. And over, I could have swapped it out with under. And you could have asked this question kind of 4 times 2, 8 ways, right? And I will give the same answer, which is if you're a long-term investor, right, looking to get a turbocharged return on your portfolio with cryptocurrency, you can do that over the long term, right? If you believe in a cryptocurrency as a going concern, it means you believe in it. Right? There is utility value across the many cryptocurrencies. I don't know which ones will live, which ones will die. Just like I don't know which stocks will be around in 10 years' time and which ones won't. But I know as a market, they have a purpose and they will be valued at something going forward. Right? You don't have to worry about whether something is over or undervalued, right? You can build your portfolio, that 67, 3, 30 portfolio, and invest in it over a long period of time, 20 years, 30 years, however long you want to achieve your financial freedom, right? And not worry too much about whether something is over or undervalued, and just continue to add that allocation and trust in the mathematics of investing over time, right? With diversification, with dollar cost averaging, which is this, every month I get my salary, I invest my surplus. Invest in what? Invest in this 67, 3, 30 portfolio, right? And I'll gain over time. And if the crypto market drops by 60% in the next 3 months, I'll continue doing that. It doesn't phase me. I sleep very well at night because I know in the long term I've got a very nice diversified portfolio across bonds,
All the
equity,
asset classes.
ETF, and cryptocurrency, which helps me achieve a very specific target return, in 20 or 30 years time. So for me, similar concepts apply, which is you don't have to time the market. Don't worry. I'm not worried at all whether cryptocurrency is over or undervalued. I continue, and I recommend anyone who's looking at long-term investments to continue investing for the long term.
Right. Super rational perspective. And I think that's something that we all need, right? Oh, okay. We're in one of the last few questions, I've been told. Since we're in a bull crypto market now, do you suggest investors cash out and then DCA back into the market slowly?
Yep. I think this has yet to be proven conclusively for the crypto space. I think it's starting to, though. It's starting to look very similar to what I like to call leveraged equity investing, meaning it's like stock market investing, just highly leveraged because it's not really leveraged, it's just highly volatile. right? But if we take the lessons from stock market investing, right? How do you know it's a bull market now and it won't be a bull market later, right? How do you know it's a bull market now? It won't be a bear market later. If
Right.
you can predict the future, then you don't need anyone, right? You can just do it yourself, right? I can tell you nobody can predict the future, right? What I can tell you is people who are not in the market, right, and try to time the market, right, whether it's the crypto market or the equity market, they will lose out to people who don't time the market and have time in the market, right, 95% of the time. Meaning somebody who says, okay, I'm gonna wait. It's too expensive now. I'm gonna wait until it
Yeah.
crashes, right? It might work for you. It might get a crash. You put your money in, right? But because it has been proven in at least the stock market world that timing the market loses out to time in
Time
the
in the
market
market. Yeah.
95% of the time, right? You're unlikely to be able to time it as well as you think you can, right? And for me, if I'm looking at cryptocurrency as a rational investor, a savvy investor looking to have a little turbo on my long-term returns, I'm going to go with a way that has been proven to work at least 95% of the time versus something which has not. Right? So that's kind of what I would say.
Nice. I mean, again, it's just another proof that you can't really run away from like the basics of
Yeah.
investments, right? Regardless of whatever it is, right?
Yep.
Cool.
I mean,
Okay.
I'll give everyone a hint, right? Which is, cryptocurrencies have been up as much as kind of 100% this year and down 60% and back up by kind of 80%. And all this time, if you had started dollar cost averaging from kind of February or March or May, April, you'll be still up on your portfolio versus if you had invested in April or May, right? So how
Yeah.
do you know is the answer, right? But
Correct.
if you have just been consistent, you will beat everybody else, right? So that's kind of,
Nice.
and I believe this will continue to be the case.
Good perspective. Anyway, we are on the last question. I think I've been told. We're in the last question now. Is this the okay? Yes. Last question. Do you think crypto is a bubble? It has the characteristics of a bubble.
Yeah, no, I think if you look at what the characteristics of a bubble are, right, which is supersized returns in a short period of time, without corresponding utility metrics, meaning has adoption increased tremendously in the past 12 months? It probably has, right? Has it increased to the point of justifying those returns? Maybe not, right? But that's not the point, right? The point here is even if it was a bubble, I can't time when it will burst, and I can't time when it will grow bigger. What I can do though is to guarantee that I will have better risk return characteristics, right, over a portfolio which doesn't have it. Right. What I mean by that is it's been proven that you get better, whether it's high return or low returns, besides the point. It's better risk return characteristics in my diversified portfolio. Right. So that's what I can say, which is if it continues to behave how it has behaved, and not just in the last few months, but in the last few years, right?
Right.
For me, the maths don't lie. You don't have to be a technical trader to look at the added value to a portfolio in terms of higher risk for limited return, higher return for limited risk differences because it's somewhat uncorrelated from everything else.
Nice. That's I think a really nice way to kind of summarize this week's discussion. We have no more questions. No more questions. Yes, no more questions. So anyway, thanks Han a lot. I think it's very nice to hear some rational perspectives when it comes to investment, regardless of whatever it is, right? Crypto, stocks, properties, even all these things. There are a few fundamentals that I think you should never ever kind of forget, right? So we'll catch you with some other topics next time. But yes, for everyone else who is watching, last round, sorry, I promise. If you want to know more, and if you want to know more about investments, not just about investments, budgeting, and all forms of personal finance, basically, if you need some help, you can always check out Ringer Plus Advanced, which is a one-to-one financial planning service, and you can meet either with Han or you can meet with a few other CFPs that we have, and they will be able to guide you and create a personalized financial plan that is suited to your financial goals. So anyway, with that, thank you so much for watching. We'll catch you guys next week. See you, Han, in a few more episodes, and stay safe,
See
everyone.
you.
Bye.